Check, check. All right, we got sound again. Welcome back to another thrilling adventure of 500,000 trade reviews. Today, the spy kicked me directly in the male genitals. It was my fault, actually. A lot of things went wrong. I did a lot of things wrong, and I formulated new rules as a result. I exceeded my maximum daily loss, which is, a, it's not a tragedy. Like I was gonna say, it's a tragedy, and it's not. It's just a great example of a learning experience, and I am proud to say that I formulated new rules. So let's get into it. It's a thrilling tale, but in case you don't want to stick around for all of it, please screenshot these rules and think about how they might apply to you, and what you might get from them. And I'll go over them real quick. So my max daily loss is 25 bucks. One thing that I did wrong is this is something that I should have respected until I'm profitable, until my profit chart hits the big O. One of my rules is, I should be doing core positions only. So I did not adhere to that rule today. It went out the window for whatever reason. So I reiterated that rule. When in doubt, cancel or exit. So if you've got an order hanging there and you say to yourself, golly, I'm not sure I want this anymore, cancel the order. Just like, if you're not sure anymore, then something's telling you something and maybe you should listen. I must wait more than 15 minutes after a miss. I think that I did this, but I think that my misses really impacted my trading today. And so we'll go over that. And I think that I did wait more than 15 minutes after I missed. But all of these things kind of compounded. If a fat finger entry occurs, and this is a big one, if a fat finger entry occurs, exit immediately. So I accidentally took a trade and it turned into a huge disaster. And I added this after I took this picture, but in here it should say, in the event of an emergency, average down only in the event of an emergency, or up if in the case of short selling, but you get the idea. Mitigate disaster only in the event of an emergency. And I added, and then this was a big rule too, and this is the second time that I've had a disaster for not observing this, but I wound up formulating it today because of what happened. So if you're averaging down to break even, don't be greedy. If you're averaging down to break even, then break even is the plan, and it's an acceptable plan. I don't like break even plays. That's never my goal. And so I had to make this rule, because when breaking even is the plan, then it's okay to break even. And that was something that I wrestled with today, and let's get into it. All right, so started off like a normal day. I actually got up on time today. I was up just before 6 o'clock Eastern, and I woke up, I walked my dog, I did my morning rituals. It was leg day, so that was fun. Um, I meditated, I got my whole meditation in, and then I was like, all right, let's fire up the old brokerage. So I think that I came in about 15 minutes after market open. And I used to be a hard ass on myself about being in the market in pre-market. And that definitely has its benefits, but that's neither here nor there. So I get in a little bit after market open and I'm looking around. I'm looking at eyes and ears, which is a whole different story. I actually missed twice on EYES, and we can show that. Um, just a quick glance at this crazy chart. Wow. So I missed here. No, I missed here. Oh my goodness, at the 250 break. And then I missed here at this $3 bounce because my entry was a little lower. And then ears, I was like, eyes, ears, eyes runs, ears run. But I did not have conviction in this ridiculous trade. They're like peanut butter and jelly. I can't believe it. It's so silly, but I mean it works. Look at it. That's a beautiful double bottom right there. But I was playing the SPY. So I missed those two shots on eyes, and I noticed that the SPY was doing SPY stuff. And so I paused the recording to wait for STT to load. That took longer than I care to admit. So I see this reversal here. At this point, I'm thinking it's a reversal 3 because it's fallen down. You got the R1, boom, right there at red green. Oh no, I was calling it an R1 because you had red to green right above. And I took profits right away. I should have been, oh, okay, I'm not gonna should myself to death. Let's not should our pants here. A reasonable target would have been the red to green mark, the previous day's close. And I did not hold to my target. I don't know that I had declared it a target before my entry, which is problematic. But I was also having trouble. I was having trouble with my software, both with STT and with eTrade Pro. And so I was mostly running off of Fidelity, and for whatever reason, I guess I forgot to turn on the previous day clothesline. Yeah, it's not on here. I'm going to set that right now. Let me pause you for a second. Yes, today shall be known as the day of mini pause. Yeah, so for whatever reason, Fidelity's not showing the previous day's close. Or I'm just not seeing the monitor well. I don't know. Anyway, my stuff was janky, so I don't know if I just didn't see the target or if I didn't declare it. I took 4-to-1 risk reward on the trade, which is amazing, and that's awesome. So then down here, it puts in this new low a day, and I see this candle with all this fading, or with this volume staying the same, but the candle's getting smaller. And so I think that this is a sign of a reversal. And I put in an order for a call. Oh, it was actually this one? No, I put in the order here for a call at 205, thinking it would reverse again. And then I didn't get filled and it popped up and I didn't cancel my order. Usually, I would cancel my order when that sort of thing happens, but for whatever reason, this time I didn't. And I even said out loud, I don't know if I want it anymore if it comes back down. And that should have been my cue to cancel my order, but I didn't. And lo and behold, the SPY comes back down, fills me, continues to dump off, and I wind up kind of panicking out. And I made a mathematical error there because I thought that my loss at that point was $15, when in fact it was $25. So I exceeded my daily loss at that point, and I should have stopped trading then and there. That should have been the end of it. But I thought that I had $10 worth of gunpowder left, and so it came back down here, and this time the excuse me, the volume was lowering, the candles were getting smaller again. It's another reversal type pattern, and I'm thinking this is going to be the best risk to reward play of the day. And so I throw an order in, I don't get filled, it pops up, I canceled my order that time. It comes back down. I'm thinking this is a nice reversal. Also, this is 25 minutes later, so I'm comfortable with this. I've given it enough time. I'm not rushing in. It comes back down. I throw in another order. I miss again. So then it pops up the Q, and this was a really strong bullish candle. And I'm thinking it was a bit unreasonable. And so I grab a put. Well, that put is wrong, and it pops up. And now I'm down $20, thus exceeding my maximum allowable loss for the day. And instead of cutting, like my rules say, I averaged down. That action was not authorized because my core position is one contract, and I'm only supposed to be trading my core positions until my profit chart is in the green. And so that was a big old bad move. But I averaged down, and the SPY pulls back, and I am now profitable on that trade. And so I'm trying to sell those contracts, but instead I wind up buying one. I have to sit with this for a second. Hang on. You don't have to sit with me. I'll pause it. Okay. Mistakes happen. That's fine. But I buy a contract when I'm trying to sell my other contracts, which, you know, it should have told me, like, I think that this is, you know, best case scenario, so I don't need to be holding this other contract. I sell my first two positions and I'm profitable again. And now I'm watching the SPY for another pullback. Despite the fact that it had broken this downtrend, I'm convincing myself in all manners of ways that this is a new downtrend and it's perfectly fine. So I'm sitting here with this contract that I should not have, and I've sold the other two contracts because I think that this is a good place to not be holding these contracts. So all of that should have told me something right there. And then the SPY pops out above this consolidation, this 15-minute consolidation, and I'm thinking, doggone it. I'm thinking the VWAP's gonna, so right above that position, there was a volume profile, so there's bag holders there. There was the red to green line, so got the previous close resistance, and then there was the 5-minute 50 SMA. So I've got a lot of resistance right over my head. And so I'm saying, okay, if it breaks through this spot, which was right here, if it breaks through this spot, I need to GT foe. And it did break over that spot. And I did attempt to GT foe. I did hit my sell button. And it would have been a disaster, but it would have been half the disaster that I wound up with. So maybe I should have market ordered out. That's totally debatable. Maybe I should have just taken what I could get and GT foe. But I decided instead to wait for signs of a reversal, to average down on my put contract, and to break even. So I did the math for a few prices. I built a really quick spreadsheet, and I was keeping an eye on the price of the SPY and the price of the contracts. And whenever I thought that there was a good sign, I would enter the price and, figure out how much is this going to cost me and what will it bring my average to. So I believe, so this contract here I bought for $1.50, and then it pops up to here, and at this point, so I'm looking at this doji here with all of this volume, and I'm thinking, okay, pullback time. And I bought 5 contracts at 63 cents, bringing my average down to 78. And lo and behold, I was right. It immediately pulled back. As almost the instant I got those contracts, it pulled back. And the price of the contracts went, there was a little bit of shakiness. There was a pause, right where I had bought it. I threw in a stop loss order. Which was very tight. So I got those for 63. I threw the stop loss in for 59. I did not stop out before it pulled back. So it pulls back, boom, my average is now 78. It pulls back and the contract prices get up to 78. I have to cancel my stop loss in order to put the order in. But at this point I'm thinking, at this point I get greedy. I'm thinking, gosh, I'm so smart. I just averaged down. I'm break even. I can do better. I can do better than break even. And so I left my stop loss in, thank God. And I waited to see more pull from the SPY. And I didn't get it. It popped back up. It hit my stop. It took me out. And I lost what for me is an obscene amount of money. Okay, it's not an obscene amount of money. It's a gut punch dollar amount. but it's not the end of the world. It's not the end of my trading career. I'm not about to go get a job yet. Um, but I'm looking for applications, you know? um, yeah. So uh, it was hard. It was a hard hit. And later uh, in the afternoon, I am proud of this little trade because I did see this shooting star candle, first one in a long time. I thought, and it was right up there against the old high or right above the old high. And so I'm thinking, oh, okay, now it's going to pull. I grab a put, even though I shouldn't have, because I did so poorly on this trade. I had already exceeded my max daily loss. I grab a put, even though I shouldn't have. It pushes. I respected my stop, so that was good. Um, that's it. That's my trading review. That's 3-5 trading review. Still green on the week actually, which is awesome. I'm still grateful to be alive and be a people doing people stuff. I'm not unhappy. I'm I'm glad to have this lesson, and I would prefer not to learn it again. So hopefully the formulation of these rules will prevent future peril. So thanks for watching. Have a great weekend.